Alright guys, so in this episode we're going to be solving the very infamous problem of I don't have enough funds. So the I don't have enough funds reasoning there's many reasons why people fall into this category. It is actually very common. One, their market is completely, whatever they put into the market is completely stuck. The next thing is that they don't have enough money after they pay off all the bills and whatever liabilities they have. And of course, maybe when they are in the investment, they don't strategize the take profits properly and they do not know how to assign and allocate the funds for the next intended investment, trade, or next market cycle. So we're going to be covering all this today. And for going forward, it is good to have reminders about what to do. Now, obviously, you can do this yourself if you're very disciplined. If you're someone who is in our CG Protégé group, in our legacy, usually you have this extra benefit or reminder. Because I think at the end of the day, any kind of community, any kind of group, especially when they have the foresight, the experience, and the professionalism, they will be able to help their group out. This is obviously something that a lot of folks don't do. Okay, so right now, I'm going to be just covering the strategy very simply for everyone to understand. Okay, so this is okay. So you are now probably okay. So let's say for example, right, you intend to put say your initial investment. Whoa, this is a bit fat. Give me a second, guys. So let's just face it. There are folks that come in on a weekly, monthly basis. This is usually with a dollar cost averaging strategy. Then there are folks that come in with then there are folks that come in with a lump sum. So let's do the dollar cost averaging strategy first. So say, for example, every month you have $300 that you can afford to set aside. Whoa, okay, wait. Okay, so every month, let's say you have $300 left behind, and you are and this money, right, is after you have paid off all liabilities, and you decide to put this sum of money into any kind of investment. But for obviously my channel is focused on crypto investing and trading. Let's just focus on just crypto first. So every month you're going to contribute $300. So as the market goes up, right, your $300 could actually do pretty well over a certain period of time. All right. So this is the timeline. Say after a while, let's say now we are in the period where the market is actually picking up, where the market is actually improving. So your total of your $900 now becomes say $1,200. Okay, so you had a nice increase. So you have no intention, and clearly you should not take out any form of funds at the initial stage when you're building up your overall portfolio, because you do not want to have this situation where you don't have enough money in the market. You have to always consistently have money in the market, so that way you are able to build over time. So let's assume that right, that every time the markets are going up, down, and then after that it crashes, and then there's this so the market cycles are all over the place. Okay, so the market cycles are all over the place, and this applies to most of any kind of market situation. Even your cryptocurrency pairings are like that. Okay, so let's say you were continuously contributing at different points. Okay, these are your contributions, right? Okay, and sometimes you bought a little bit higher, sometimes you bought at the extreme low. Okay, so overall your average price point would be decently attractive. Okay, decently attractive. When it comes to dollar cost averaging strategy, it's actually quite simple. You don't have to think too much on the entry levels or entry points, because sometimes people don't have the skill sets to determine the entry. Now the exit is very, very important. So let's say after you have accumulated a certain sum. So at this point, let's say there's a significant event in your life, and that significant event could be, say you are getting married. Okay, so say you're getting married. Okay, you're getting married and you require, I don't know, you require anywhere from, $30,000. Okay, an average wedding in Singapore is about $30,000. I mean, that is on the cheap. Okay, so 30,000 Singapore dollars, which works out to about anywhere from 22 to 25 US dollars for that one night or that one event. This is something. At this point, you obviously want to take some money away from the market, or if you have been saving up, via your bank account and whatever, you can do that. But I would rather you take it out from the market, because when you take it out from the market, you are actually realizing this very important event in your life. So that way, let's say you've been doing this for 3 years. Okay, let's say you've been doing this diligently for 3 years, and your current portfolio is, say, $50,000. Okay, taking out this sum of money is very, very straightforward. But a lot of folks, right, when they take this sum of money, they continue? They should continue to put money into the market. That way, they will always be able to build their funds. Because don't forget, right now you have already a realized profit. So right now, let's say every month 300 for the past 3 years, you have actually a very solid amount of funds that you have raised. So let's say 300 times 36 months, it's 10,000. Your total contribution for 3 years works out to 10,800. But the crypto markets are always very volatile, and it's always very possible for you to make this kind of money. So your total contribution is 10,800. Your overall portfolio is 50,000. When you took out 30,000 from the market, obviously you have a good sums left behind. You are still, in fact, 2 times, almost close to 2 times above your initial contribution. So this is the power of the dollar cost averaging strategy that you can do. Now, if you don't have any live events yet, okay, so now this is just the scenario where you're just doing this dollar cost averaging strategy. Naturally, the markets are always going to be volatile, and you need to have a long-term perspective. Now, I'm going to do an example. Sorry, we can stick to the chart. Now, I'm going to do an example where you want to take money out of the market consistently. Okay, so let's just remove all this. And we stick to the same, we stick to, okay, let's change the timeline a little bit. Same thing, you're going to contribute $300 every month. Okay, you're gonna stick to $300 every month. Okay, and you have to have a 3-year to, say, 5-year time horizon, because we are looking at life-changing income, guys. So when you want to focus on life-changing income, you cannot think of the short term. It just doesn't happen. And I realized that too much of the space, too many, very often, in fact, in anything that involves investments, right? Somehow people just have the mindset only to think of flipping. They never think of the long game, and that is why you always hear the bar stories where, okay, they manage to make a little bit of money, they start bragging about it, but then it's never sustainable. They do not know how to create or stay invested in one particular asset class long enough that they can actually build this wealth over time. So now I'm going to just go into the actual difficult part of this whole strategy. So say you entered at $300, right? And right now there's this very, very quick quick bump up. Say this was let's say now at this point, right? At this point, the market, this all these contributions here actually bump. Let's say you made 1,200 here. Okay, let's say you made 1,200. Let me clear the chart a little bit so that you all don't get confused. So let's say you contributed 300, and then after that, now the value became 1,002. You doubled up your money, okay, in a very short span of time. Let's assume. What you want to do is actually shave off a little bit of that money. Okay, let's assume you managed to make let's assume from that $600 it became so the $600 you made it into 1,002. From there, you want to take away some of those profits and put it into a bear market fund. So this bear market fund, right, is not for you to capitalize and throw back into the market. Your monthly contribution will come from your salary less your liabilities. Okay, so just take note, your monthly contribution will come from your salary less your liabilities. Liabilities. Yes, correct. Okay, less your liabilities. Okay, your monthly contribution will basically be salary minus less your liabilities. This doesn't change. For as long as you intend to stay in the market, it will never change. Okay, so your contributions will be always there. Okay, you're always bombing the market with your funds. Now, what happens to the profits then? So as I mentioned, any profits that you make from the market, you put it into a bear market fund or the I don't have enough fiat fund. Okay, so that you will never have this situation. Okay, the bear market fund. Now, this obviously in crypto has a few functions. You can consider BTC itself. You can obviously consider any kind of stable coin, USDT, or if you want, you can even leave it on a particular in the digital form of US dollars if you want. Say if you're using Gemini, Coinbase, or whatever. Okay, you have to learn how to trust these certain systems. Now, obviously, if you don't trust, you can leave it in your bank account. But the problem with this is that when it goes to your bank account, the likelihood of you spending it is very, very, very high because now you have this extra money. And human beings are very naturally, they want to take it for a holiday. They want to buy random stuff and end up the whole strategy just collapses because human beings are like that. So what you need to do is just make sure that you have this discipline. Now you're probably wondering, oh Ryan, then when the market goes up, when does that happen? Like if my fund now is 20 say my portfolio now is up 20-30%. How much of that 20-30% do I shave off? Now 20-30% profit, you can shave off 10%, especially in the early parts of the bull run. Now, some people may say, Ryan, you should have everything in the market. That's why I'm saying you're always contributing. You're always every month, every week, you are setting aside money to put into the market. No one is telling you to remove that amount away. You see, folks, you must be thinking, Ryan, why don't I just do it when the market is peaking? Do you think that everyone can do that at the right time? Are you that capable that you can really execute that play at the right time? Are you so confident? You see, are you so confident that you can do that? I guarantee there are people who don't even know when the market does something. They're either at work, they're on holiday, a life event happens, they fell sick, they're in the hospital. All these things can affect your strategy because you are now managing it. No one is gonna do it for you. You see, Unless you have an asset management company that can actually execute this plan, you have no chance. So right now, by sharing this strategy with you, right, and if you're obviously part of my group, obviously you have someone like me to remind you of doing such a thing, especially at certain market events. For example, when the recent market just went up recently, very aggressively from $5,000, Bitcoin ran up to $8,000 over dollars. The altcoin space, after 1 to 2 days later, when Bitcoin was stabilizing at $8,000, started to show some forms of life. Altcoins started to show 15, 20, 50% even for the random stuff. And this will happen over and over again. From there, each trade becomes highly profitable. Yeah, don't forget falling asleep. Exactly. So this is the point. This is the point. You see. So when you have a strategy in place and you keep it's like exercise, guys. When you keep going for your regular routine, you know exactly what to do. So the whole idea is just to keep aside a portion. So let's say you made 30% on a particular trade, and setting aside 10% of that. Okay, let's say your 30% is $300, okay? Which isn't a lot, okay? But you have to ask yourself, how much are you putting into the market in the first place? Okay? So let's say $300, that's your profit, and you set aside just $30. Is that gonna kill you? Is that going to kill you? It's not gonna kill you, but this $30 goes a long way if you look at a 3 to 5 year time frame. And each time, suddenly this $30 can accumulate to say $3,000. The next time a bear market comes, you won't say, hey man, I don't have enough funds. What do I do now, Ryan? Fuck off. If you don't have the money, that's your problem. Because you were such a loser that you don't have enough money, you don't even plan, and then you expect what? Someone on YouTube to help you out with the situation? That's your problem. So that's the thing. A lot of the time, I hear this same thing and it's so annoying. I don't even know how to handle it. I don't even know what to say to you. So now with this strategy, you don't have an excuse already. You must be thinking, oh God, I have to execute this for the next 3 to 5 years. I don't even know whether I can, I don't even know what's my long-term plan in the next 6 months. That is the problem, guys. When you can't even think long-term, you sometimes, right? Sometimes I don't want to be too blunt. I don't want to be too mean. But you want life-changing income. You think about striking the lottery. You think about going to Vegas. You think about all these kind of fast gratification stuff. It never works. Yeah, sure, there are certain success stories where people get rich overnight through certain events or certain things that they do. But in reality, do you think that the moment that they have the money, because the money came very suddenly, do you think that they have the mindset? Do you think they even know what to do with the money? They will be completely lost. Why do you think there are so many stories of people who suddenly became rich, okay, but they were not savvy enough, financially savvy to manage that money? Not only that, they will approach advisors, people who want to probably make money from them because knowing that they have money, right? So all these things, they start buying businesses or even setting up a business without even prior business experience. All these things start to happen because you don't even know exactly what to do. So that is the point that I'm trying to make here. When you have a plan like this, you can call it whatever you want, guys. The rainy day fund, the when shit hits the fan fund. Go and call it whatever you want. Right? Nowadays, you can just set up a wallet and name it whatever you want. Do that. Start with that. And from then, you start accumulating. So every time, and I guarantee, okay, that every time the market corrects, you will have money. Every time when the market corrects, you will have money. That's the whole point. You want to be able to capitalize and not say, oh no, this thing happened, that thing happened. Guys, let's just be very real. As we age, we grow older, we fall sick, we have children. Our children require funds as well. Okay, our parents fall sick. We need to help them. Sometimes you personally may have a certain life event. All these things have to be planned out, guys. So if you want to stay in the market, you cannot keep thinking like a pleb. When you think like a pleb, you will only live from paycheck to paycheck. Sometimes you may not even have a paycheck. That's the thing. It's very, very sad. And when I look at the whole space right now, right now, this space, the crypto space, is going to give us a very, very good opportunity to make money, serious money that can really help us for a very long time. And if you do it right, it could even help your next generation. Think about it. Think about it. But before you can achieve that, you need to have the strategies in place. Okay? So this is something that you might need to digest. You need to watch it a few times, But it's very simple. It's very straightforward. But the only thing is, are you disciplined enough to remind yourself or have someone, for example, to assist you on building this? There are folks that are going to be able to do this. I know that only less than 10% of people are able to do this on a consistent basis and be disciplined enough to execute. That's why I can freely share this strategy. And this strategy is used by a lot of high-end asset management companies. Even companies themselves use this strategy. It may not exactly be like that, okay? But I guarantee you that every high-level corporation, asset management company, institutions that hold assets, companies that have large revenues coming in, they all have a strategy like this. Because they know, especially if they've been around for 20, 30 years as a company or 20, 30 years as an asset management company, they will always make sure that they have money consistently, or they are able to generate revenue consistently and put that aside. Cash in the bank is not necessarily good, but having cash when there are times of a depression, or let's say there's a market opportunity, like for example, you have a crash in the market, you have money. Or when there's a crash in the market, you need to buy up a certain company. All these things are important. When the market crashes, you need to have the money so that you can go and buy the very valuable companies that are suddenly just being done by people. Because maybe people just panic, they will just let go of their funds. At the same time, it may even help you. Because you can't time the market, guys. No one can time the market. There'll be some people that will think that, Ryan, this strategy, I don't need to use it, man. I'll just cash out at the top of the market or near peak. I will just leave 100% inside and I will cash out at the near peak of it so that I can have everything as cash, and then after I'll go back in. Really? Really? You think that you're that capable? If you are, great, good for you. You're probably less than 10% of the overall folks who can do that. Less than 10%, maybe even 1% that can do that strategically. Even I can't even do that strategically. So that's why if I can't do that strategically, I have to come up a system for myself. This is something that I use, guys, that can consistently help me to build funds over time. Because I don't know. I wouldn't know that 8,000 could go to 5,000. Or 5,000 could suddenly go up to 10,000. You see, I can't tell. But what I can do is control my strategy. Because I know that for a fact that every time that if a certain profit percentage happens, I just set aside a little bit of money. It doesn't hurt me. Because overall, I don't need that money. The whole idea is so that you can tell yourself, I don't need this money. I want to be able to set it aside. Every month, I know that $300 is going to go into this market. That's all I need to do. And all I need to focus on is making sure that my portfolio grows over time. Okay, and even my investable portion, the part that I committed every month, will eventually, let's say in my 10,800 becomes a $30,000, $50,000 portfolio. Even when I need to take it out for a life event, getting married, I'm gonna have to pay for my master's degree or whatever. Okay, whatever. You still have money in the market. You know how miserable it is when you know that this market has so much potential and you don't have money in the market? You know how sucky that feeling is? That is something that a lot of folks need to understand. It's not about, oh, the bear market came, thank goodness I'm out. No, you want to still have money in the market. When you have money in the market, you have a chance to turn it around. You have a chance to make money. So that's the whole point, guys. That is the whole point of this video. So I hope that everyone who has questions about this strategy, feel free to of course join the CG Protégé community chat. That's obviously free for everyone to join. At the same time, if you're really serious about looking into this space, obviously the CG Protégé Pro is available. That's $80 a month for you to learn how to trade, how to invest, how to come up with strategies like this, how to think long term, how to look for life-changing wealth. Thanks for watching, and see you in the next live stream.